In this video, I want to just quickly discuss about stocks and what it seems to really mean when you own a stock. And I don't want to give you the definition here. I just want you to consider this term in its context and as a spectrum, right? What does it mean to have this? What's its context? How is this perceived and carried out in actual practice, cause and effect, that sort of thing. So let's take a look quickly. I'll draw some pictures up here. It'll help us think about this. And there are going to be exceptions. Stocks are a complicated thing. They're to what I'm going to draw here, but let's keep it simple so that we can try to understand the kernel of the idea. And that's why in this analysis we've done, I've decided, and I told you this, that we would just focus on stocks. For example, not on bonds or not on stock options, just the basic trading of stock. All right, so let's try to figure out what that is. And it seems to me that every stock is going to stem from a company, right? Almost every stock. In fact, there's some exceptions to that too. But let's just focus on this. Yeah, you got your company here. All right, nice front door, some windows. You get the idea. Company M. Okay, and company M has actual activity and counterparts in the real world. And I hate that phrase, but it is a useful phrase. So I guess I don't hate it too much. But in the material realm, it has connections, it has money, it has capital, it has investment of its own, it has projects, it has activity, it has employees. Okay, so it has actual activity that is carried out on a day-to-day basis. Right? Now, let's put a divide here. So here we're going to say material realm. And over here we're going to say a stock market realm. Okay. Now, so you have CEO, CFO, you have all that sort of stuff. I mean, you have administration, you have employees. Let's just say they're not so happy with it. Well, you can't tell, but employees, customers, coming and going. Okay, you get the idea. Then you come along and you get on your discount broker site or whatever, or you get your full service broker to do this, whatever. You buy stock in this. What did you just do? What did you get? Used to, you got paper, little paper certificate. Now, if you buy stock in the Packers, you still will get paper. Although they tell you that it doesn't get traded or anything. But I never did buy stock in the Packers. But they used to get paper, and you could will the paper away. You could frame it. You could do all sorts of nice stuff. What do you get now? You get a notice on your screen saying you now own, I don't know, 5,000 shares of M. Okay? It's just a notice on your screen. It's an electronic transaction now. Does that mean you can call up M and say, hey, I would like to, give you some advice of how to run your company? Absolutely not. You've got common stock. You'll be lucky if you get a mailing in the mail saying, let's vote on some representative of some branch. Okay? You only have a token chunk of the pie. You have to buy the majority of the common stock to even start being considered as a player of their affairs. Okay? So why did you just buy stock? And what did you get? You got an electronic marker. If you want to put this back on the paper realm, it might help to make sense as an analogy. Let's get pieces of paper. Each one of these say, 1,000 of M, MK, M1, M stock 1,000, 1 kilo. Okay, so you have 5 pieces of paper. Why did you want that? Because something happens on the market realm, doesn't it? You can trace every day time and price, this line of people that are trading their stocks. This line, the line that you see on the graphs, represents nothing other than people trading this, or refusing to trade, or panicking and dumping it, or getting very greedy and trying to buy everything. Whatever. It's just happening here. This company might have had declared a week holiday. They're not doing anything. Maybe they didn't do anything. Maybe an earthquake just swallowed the building. Maybe who knows? This doesn't represent what's going on here. Now at times it does. Let's say that they fire the CEO, or the CEO gets subpoenaed. You get some subpoenas from the SEC. Now that might happen in, let's just say, June. It just depends on the press release, right? Because the press release is acting like the communication between these two. Regular Joes over here, people, invested owners of the business. The press release has to take care of this. If the press release comes out on the same day, great, you find out, but if the press release waits a month, you won't know. You won't know over here until the press release comes. So you get data. You get data in here. And it may not be real-time data. So there has to be, you need to see a divide happening here in the material realm, where there's activity here, and the market realm. This is often run on the perceived. No, perception. Perceived performance. Okay? And most of the people that are going to buy stock want it to trade. They don't really care about dividends. In other words, every year the company might give its stockholders some money because they own stock. So I think Apple, people that own Apple this year might get $20 for every share, which means a lot if you have 1,000 shares. I don't even know if they're going to get that much. That's a lot, come to think of it. Most dividends are not that. I saw some company saying it was going to give 2 cents for every share this year. So sometimes you do get a little bit of money, but it's certainly not enough to live on unless you're rich enough to have a huge amount of stock. And if you're rich enough for that, then you don't even need to be considering this as a retirement strategy. So they wanted to trade, and they want somehow to buy this and to be able to follow the movements of the market, so that they either can, if they bought low, to sell high and to make a profit, or if they realized things were going to fall, to short it to make a profit that way. They just want to trade. And they'll trade in a day, in a month, or a year. It just depends on the philosophy of the broker. Okay? But all you have to do is see what this line is going on. Now, if you can manipulate the data in the perceived world, you can make the stock more desirable. Now, I'm not talking, you do it by making the company look good, but it's really, you want to try to do whatever you can to make the stock desirable. Okay? And the company can be cracking apart at the seams with a broken sign on the door. It can have a token website with only one full-time employee. The rest are partners because they're CEOs or they're administrative officials of other companies, and they just put this together to trade something on the market because they're doing this too. You don't know what's going on over here. All you get this data. It could be real time. It could not be real time. It could be skewed. It could be full of bias. It could be fraudulent, and it's affecting this line. And the fact that you have stock gives you the opportunity to make money off this line's movement. And what becomes most important to you, if you're doing it this way, is the movement of the line, not the existence or the performance of the actual company. This is what matters. And because it's perceived, it can be manipulated. And sometimes companies that recognize this do things just with the intention to get this line to go where it wants it to go. They don't really care anymore about, I'm not talking about this across the board, but some companies will get to the point where they're so focused on the bottom line, and they have so many shares out there, and they're the inside people, the core infrastructure of the company is so invested into the shares that their main push to do business is to get this line where it needs to go. And they'll couch it in very prudent terms. So we just need to take care of our shareholders. Well, they're saying that they exist primarily to get this line to go up. And the line goes up only for the vast majority of the people that own the common stock. The only reason they want it to go up is so they can sell it later. I mean, it's to trade. You never buy stock. You should never buy stock to keep it. You trade it. You buy it to trade it. And whether it's a day or a decade later, you're going to trade the thing. You buy it to get rid of it. And you buy it because you want cash. Or the electronic equivalent. Okay? So it's this thing that matters the most in this realm. And the stocks allow you to make money off this. If you don't want to go stock, you want to stay private, or you just don't want to enter this exchange at all, you never introduce the token elements that allow people to play on your name over here. So you aren't traded on any exchange, and you make money over here solely on the basis of your product or your service. That's the only way you can do it. So there is something to be said about private companies that refuse to be traded, because they're saying we want. Some of them may be saying we want to streamline and focus our energies on our product line, on our service. In other words, we want our company to provide quality service or products to our clients so they can be essentially served for them. Not so that they can start thinking very good about us and give us a good perception over here. Because it'll never carry, our good work over here will never carry over here, because we never entered the market in the first place. We never had an IPO, which is an initial public offering where you decide to get listed and then you start selling shares. So you need to consider this when you think about what essentially is a stock. A stock means that a company has decided to have two realms in which it carries out operations. One realm is based on material causes. Historical events. I mean, the people show up to work and the building is there. And they either make money that day or they don't. Over here, the realm is on perception. It's an imaginary. People imagine the company via the amount of stocks it has out, how the trading is happening, what the last 5 days have shown of the line movement. It's perception. And it's built on data that's given out by press releases. Data could be biased, it could be shoddy, it could be fraudulent. That's why people go crazy subscribing to services and spending hours a day researching, because they realize how vulnerable the data is. And they also realize that's the only thing they have to go on if they want to do this. So think about that when you try to determine what exactly is a stock.